Hello, Elizabeth Ellis here with Tradeflix Incorporated, and I wanted to share a little bit of information with you guys about the cryptocurrency market. I've been reading for a couple of hours now, and I found some very interesting information. So on bitcoinschannel.com, Birth and Death of AltCoins, Scientists Discover Interesting Patterns in Crypto Markets. I think this is valuable information for anyone who is trading or acquiring cryptocurrency, whether that's Bitcoin or altcoins. Okay, so I have a lot of tabs and whatnot open on my computer, but I wanted to do this video real quick because there's just so much information that honestly, like, I don't, there's, to try to spend like a week preparing to do this video or even a day or two or three is a lot of time these days, because information is changing so fast that I just feel like I pretty much have to just kind of like have a conversation, in video format, where I'm, just putting my thoughts out there, and you may agree, you may not, you take it, you can do your own research on it, you can come to your own conclusions on it, and you can, go from there with it, basically. But I mean, let's see where to begin, really. It's saying that Bitcoin is not alone. A recently published paper analyzed the dynamics and pattern of the cryptocurrency markets. The scientists discovered several formulas to describe the market's behavior and explained it with theory of evolution. Everybody who likes both cryptocurrencies and interdisciplinary science will have fun with this paper. So I'm probably going to be reading this kind of fast because, like I said, I've been reading for 2 hours now. So I've really been, I'm in 5th gear, basically. So let's see. This was published June 8th, so a couple of days ago. And the paper that this article or this website is written about was published in the May edition of SSRM Electronic Journals. The scientists are mathematicians, economists, and evolutionary anthropologists. They took a look at the cryptocurrency market as a whole from April 2013 to May 2017, and they searched for patterns and dynamics. I don't have these highlighted on here, but the most important base for data they use is the website coinmarketcap.com, which uses data of 300 cryptocurrency exchanges. They found some thrilling knowledge demonstrating that cryptocurrencies do neither gain market share randomly nor for technological innovation, but that they follow laws known from several other spheres. So basically what that kind of tells me is that, the rise of the cryptocurrency, whichever one is dominating the coinmarketcap.com website, is not necessarily based off the technology behind it. Because again, it says that they found some thrilling knowledge demonstrating that cryptocurrencies do neither gain market share randomly. So the market share that's at the top of the website, the cryptocurrencies that are listed like 1 through 5, the heavy hitters, which this website actually refers to a couple of them as black swans, sort of as if they are almost sort of protected in a way. At least that's what my take on this was. but that these ranks are not random. It's just, they're not just like randomly just, okay, today this one is number 3, tomorrow it's number 2. It's not just a random, like there's actually like there's a predictable, they've discovered, that there's a predictable, there's prediction to it. So you could call it strategy. In other words, it can be predicted. It's not a guessing game, basically. And again, so their market share is not random, and nor is it for technological innovation. They follow laws known from several other spheres, and as I scroll down, you'll actually see a image. I could probably try to find it right here, where these lines downtrending and this line positive trending, the one on the left where it's downtrending is actually referring to Bitcoin market share, and to the right where we're positive trending is showing the top 5 market shares. So this is the evolution of the market share of top ranking cryptocurrencies, and what I found interesting about this was the pattern that is fluctuating across the line, across the trend. And if you actually look closely, which I didn't notice this at first, but this is very similar to the indicator pattern, to the pattern of the indicator that I trade. And so, again, these are, based on mathematics, and so let's see here, something about exponential growth, right? They began giving an overview of the whole entire market. There's just some really interesting points here, that whether you're investing in cryptocurrencies or trading cryptocurrencies, you just want to own cryptocurrencies, even if you're buying and holding a cryptocurrency, this is some really valuable information. And it says that they count 1,452 cryptocurrencies born since April 2013. Okay, so about 1,500 cryptocurrencies, from which around 600 are still alive. So that's less than half. And it says that it talks about like the overall pattern of the market, how cryptocurrencies kind of came into being and kind of dropped off, and then there was this exponential growth in 2015. So I looked back and I asked myself what happened in 2015, and I personally can see a correlation with this, and I won't mention or go into that because that's not what this is about. But it makes sense to me. I'm sort of just thinking abstractly here and connecting the dots. Let's see. So the whole capitalization of the market did more or less stagnate in 2014 and 2015 until it started to grow since late 2015 with a growing vehemence. Between May 2016 and May 2017, the market value quadrupled, representing an exponential growth, which the authors explain, and they give this formula. Mathematics might understand this formula, while non-specialists might find it fascinating that a formula can catch this move. So it says, but the most interesting parts of the study, after they gave this overview, they began to research patterns, logic, and dynamics, and they found some in 3 areas. Okay, so besides being able to see overall how the market, started to pick up and then kind of eased off, and then, in 2015 picked up, and by the end of the year, really started to just have exponential growth, 2015. So I came into trading in May 2016. I was introduced to binary options, and the binary options market is available Monday through Friday. Okay. On the trading platform that I was trading, there were the options on the weekends of some futures and some Bitcoin trading. But I didn't have, or I felt like I didn't have, my thought was that I didn't have access to a futures chart for sure. Okay. And even though I had some charts, some Bitcoin charts available. A lot of people use bitcoinwisdom.com. I didn't really like the functionality of the website, the convenience of the website. It was there, it was an option, but it just wasn't very, so I didn't really press in that hard with it. Another thing about it was the Bitcoin expiries lasted an hour long each, so there was that whole issue of patience as well. And as a new beginner, you know, trading the smallest size, there were, you know, I had to ask myself, was the time really worth the profit? Of course, it's always worth the profit, but, you know, how else could I be spending my time? Were there more productive ways I could be spending my time and whatnot? Needless to say, you know, providing signals at the same time, my focus was somewhat split. So the trading of Bitcoin kind of fell off. It really didn't, the energy and the drive that was originally going towards that just kind of went towards other things, and it just never really, I just didn't really pick it back up and keep pursuing it and keep, you know, working with the charts. Like, as you can see, when I first started the video, the browser was kind of stagnant, and, you know, so to trade those, to trade bitcoinwisdom.com, that's not a desktop platform. It is, you know, it's an actual website. And to trade multiple time frames, I have to, well, I personally open multiple tabs for those time frames. I don't just look at the 1 minute and then click on the 5 minute and then click to the, you know, the 1 hour, or click on that one tab. I want to see the indicator on all of my tabs, you know, on all of my time frames, all at the same time. So that was an issue, and you know, setting that up, I mean, that was just my thinking, you know. But back to this here. So here we are, you know, into 2016. You know, I've dabbled with the Bitcoin trading on the binary options platform, which is different than Forex. Binary options is different than Forex, for those of you that may be new to this or don't know. So anyways, it says Bitcoin is losing market share, basically. You've probably seen here. It says the most eye-catching recognition might be the significant loss of Bitcoin's market share. And I actually have a picture over here of, is this it? Let me see. Like I said, I wanted to do this on the spur of the moment, because if I tried to do this all fancy and preparing myself, it wouldn't have been natural. It wouldn't have came out the way that, you know, like a normal conversation. So anyway, you can see here on this image, and you can see that this image is showing, this thing keeps popping up. Let me, okay, so right here, it's showing you the market value of cryptocurrencies, okay? So the market value, Bitcoin, I just think this is very interesting. If you look at Bitcoin comes up to the 30, and then, so I have to really analyze this a little bit, because the way that it first appears, it appears that other cryptocurrencies are at the very top, then Ripple, then Ethereum, and then Bitcoin. Bitcoin being like either the base, or you know, I have to ask myself, are these other, like, are these layered on top of each other? Or is this the overall, like, where Bitcoin is actually taking up this much space and Ethereum is only taking up this sliver above it? Or is Ethereum also taking up the Bitcoin space as well as the sliver above it? So I'd have to review this website a little bit more, and you can check it out at economist.com. And I won't promise you that the link will be there, because I'm just kind of like going and just moving forward, because I also trade my own personal account. Like, I could be trading right now, but it's just, you know, with so much information and so many people needing to learn and so much education needing to be put out there for people to make educated decisions about this stuff and how we're handling this space and these, programs that are available that people are getting paid from. However, even mining scam programs that, there's a lot of different, variables in this that really make it very unpredictable. And so back to what I was talking about here, and so even reading, even coming across articles, for example, where India may be considering regulating, China may be considering regulating Bitcoin. Bolivia has, banned Bitcoin. It's illegal in that country, and they do not suffer from inflation. They tax the dollar that comes in. I don't want to say the U.S. dollar, but they tax the dollar that comes into their country, and that has been able to equalize their economy. They are also one of the poorest in their nation. So it's very interesting if that's the U.S. dollar that's bringing, equilibrium to their economy. If America, if the U.S. Takes on Bitcoin, as you can see, it appears that's happening, then what will happen with Bolivia? Because they're going to have to come on board. Basically, if less dollars are coming in, if they're having less tax dollars, then the stabilization of that country will be affected. And not just the economy there, but this is worldwide, so it's no longer about your local banker. This is like a worldwide bank. But let's see. So it's going on to talk about, again, the most eye-catching recognition might be the significant loss of Bitcoin's market share. The scientists tell that the first mover advantage makes Bitcoin the most famous and dominant cryptocurrency to date. So Bitcoin's name is out there. It is the most dominantly traded cryptocurrency. It's number one. It hasn't lost that rank on coinmarketcap.com. I read that tonight. It says, however, recent studies analyzing the market shares of Bitcoin and other cryptocurrencies reached contrasting conclusions on its current state. So I'm going to read that again. It says, however, recent studies analyzing the market shares of Bitcoin and other cryptocurrencies reached contrasting conclusions on its current state. Let's see. Some studies say, yes, Bitcoin is the clear winner of the recent rally, while others say, no, Bitcoin is losing its dominant position. And I think this is important because a lot of people are the early adopters of Bitcoin, right? The first movers, the first mover advantage that many people out there have. They're, questioning Bitcoin's sustainability, and we've seen the videos on YouTube where it's like prediction, the value of Bitcoin is being predicted, and honestly, there are so many unpredictable variables in here. There's so many variables in here that it cannot be predicted. It can't be predicted, okay? We can have hunches, we can have, gut feelings, but if it's not based off of a mathematical formula that includes every single variable, there's no way you can draw a conclusion without that conclusion possibly being, without reality possibly surprising some people. So I just think it's important to keep in mind while investing in cryptocurrencies that, you really want to do your research. You want to see both sides. You want to have a balanced perspective. You don't want to just jump all in and be like, oh yeah, I'm going to get rich and this is going to the top and my life's about to change. You want to stay level, grounded, stay real with it. And again, it's very risky, because the value of Bitcoin, it's not a actual currency, and it's not necessarily backed by a tangible. It's mostly, more than anything, backed by the intangible, things that cannot be seen, and things that cannot be seen can change things unexpectedly. So, the Bitcoin is, it's the function of what Bitcoin does. It's the function. It allows people to operate without a bank. It has now opened up a world, a global economy where transactions can take place all over the world 24/7, no waiting for banks to approve, Monday through Friday during business hours only type of thing. So there's a lot of freedom with it, and at the same time, with that freedom comes a lot of responsibility, because if people don't handle the opportunity that we're in right now, if a lot of people, for example, go out and scam other people with this, there was one case where one guy in the U.S. was charged $12 million for running a scam mining site with taking money that he didn't even have equipment to. It was obvious that he could not even mine at that level, due to not having the equipment to back it up. So if that's used as an example and or as an excuse to come in and regulate, like China and like the other country that I mentioned, it's not coming to mind right now. I'm trying to move forward with this. You can but let's see. So trying to stay calm, but I'm trying to move forward and not get stuck or get off track. So it says, some say it's a clear winner, some say it's losing its position, right? So while not taking a clear position, the 5 authors note that obviously Bitcoin did lose significant shares of the market last year. It says years, but anyway. If you ignore the short-term oscillations of the line, you see that the share of Bitcoin is in a constant downtrend. Now, if we look at the chart, the actual chart, it doesn't look like that. It doesn't look like that at all. But these shares, this is the trend of the total market shares. And as other cryptocurrencies come into the market, it's like, compared to those other cryptocurrencies, how much of that is Bitcoin? And we saw in that image, which we could go back to, and I don't want to make this long, because I just want to get the point out there and make this really simple. If these other coins are actually taking up the same space as Bitcoin and then some, then that's proof, or that's a visual that Bitcoin is not dominating the market. So I did hear a video where an economist said he would sell Bitcoin. He doesn't own any Bitcoin. And I'm not saying this to pick sides, because I think Bitcoin is great. There are some things about it that, as far as like the lag time in transactions and something about some segue, I'm learning all this. Whereas other people, early adopters, the first movers, they already know this stuff. But I'm still sharing this information as I come, as I'm getting it, at least this here. And so there are some slight limitations to Bitcoin compared to other blockchain cryptocurrencies, one being Litecoin. And I will say that Litecoin is, I can't really say much about it. I just can't really say much about it. You can look into Litecoin, what it will do. No one can really predict. It's a matter of looking at the chart, keeping up with the news. Litecoin does have some advantages over Bitcoin, but Bitcoin has the hype. Bitcoin is the most widely known, it's going to be the name that people think of first when they think of cryptocurrency, and because of that, it has its position, but not because of its technology, not because of what it can do, because of its name. So, that'd be like buying, a mansion, on a temporary budget. Is kind of how I look at it. On an unreliable budget. Maybe you had a great job and you lost that job. All of a sudden, you can't afford that. So there are other cryptocurrencies out there that a lot of people can more easily afford than Bitcoin. And with all these cryptocurrencies coming out, we can keep going down the page, again, there's just so much really valuable information in this, and I don't want to get stuck. So let me keep moving. Let's see. It says if you ignore the short-term oscillations of the line, you see the share of Bitcoin is in a constant downtrend. It gives you the formula. It says Bitcoin's market share to fluctuate around 50% by 2025, although, of course, very likely nonlinear effects will modify this picture. As fascinating as it is to find a formula exactly describing a year-long trend, this point demonstrates more than everything else that mathematics have limits in describing reality. As early as June 2017, 8 years too early, Bitcoin fell below 50% market share. So this was actually talking about the bubble, right, where we just experienced how a couple of weeks ago Bitcoin's price dropped. And the amazing thing about it is, like, I was looking at the chart that day that it broke out, and I was thinking this thing could go down. I didn't get in. And other unknown variables that I won't mention. That's why they're unknown. But I didn't get into it. And the fact is, though, that I was able to see that. Now, whether I trusted it or not, I could have not. It could have been that I didn't trade it because I wasn't set up to trade it. It could have been that I was simply just looking at the chart. It could have been that I was simply just providing a signal to those who were ready. The point is that the chart and the price action, the indicator, allowed me to predict that, regardless of any news. Okay? So the news just brings the hype. The news is what helps the trend to continue, right? So as Bitcoin was, getting more and more talked about, as Bitcoin was being talked about more and more, it's shooting straight up. I'm thinking what Warren Buffett said: be fearful when others are greedy, and then you can be greedy when others are fearful, right? So it's going straight up. Everybody's buying in. Everybody's being greedy. They want to make some money. That's why I was looking at it, and I just sat there and looked at it. And what happened next? The price went down. Interesting. So let's see. And you could speculate if the further unsolved block size problem, the high scalability of the centralized Ripple network, and the magic of Ethereum's smart contracts serve as black swans, unpredictable and unlikely events which destroy every statistical prediction. Okay, so that tends to really make complete sense. There are some actual errors on this paper, but at the same time, you can speculate if Bitcoin will go back to the path the scientists describe if only the block size problem is solved. Okay, that makes sense. So if they were able to, which in August there's supposed to be something that's going to happen, like the SegWit or whatever in August, and if that happens, something about some kind of split. Those of you out there who are more into this, you already know what I'm talking about. But the point is that in August, there could be it could take off more. Depends. I don't try to predict based off of the news and how I think people are going to react to it. I just react to the indicator, and I can trust that because that is based off of, it is based off mathematics. It's based off of pattern. So, but let's see. It says birth and death of altcoins. This is important because a lot of traders are looking at altcoins. Less vulnerable to black swans, which we just mentioned, right, is the broader data about birth and death of cryptocurrencies, right? All in all, there are 1,500 cryptocurrencies from which roughly 600 are actively traded. The scientists analyzed the rate of birth and death of the coins. Interestingly, they discovered a constant rate for this and some kind of market saturation. So what this means is if you're a cryptocurrency trader trading a coin that's new on the market or whatever, there is actually a life shelf that has been predicted and determined by these scientists. And I'm going to share that with you next. It says, after the number of cryptocurrencies steeply rose over 2013 and 2014, at the end of 2014, the number of actively traded living currencies leveled off around 600. Since then, this figure has not significantly changed. But not just that. Since this time, every week, roughly 7 cryptocurrencies are born. So what does that tell you? That tells you, you can look at it however you want, but, there are going to be new cryptocurrencies coming out every single week, about 7 of them. That's a new opportunity. You could look at it that way. You could also look at it like there could be more confusion and more stagnation in the Bitcoin market since there are more cryptocurrencies, because people are having to research this stuff. People are having to read about it, and the information is having to get out there. So, it says, while the same quantity is dying, so 7 are coming in, 7 are going out. After the market has reached saturation, birth and death rates of 1.16 and 1.06 respectively were established. After 2.5 years of observation, you can almost say that this rate is a law of cryptocurrency. Well, I'm honestly not exactly sure what that is. Is that 1.16? What is that? Is that like 1.1? Is that like 1 and a 16th of a week? Basically, is that what that is? So yeah, so they studied this for 2.5 years, and after the markets had reached saturation, birth and death rates were established. Well, that's the thing. So it's not 1 week, okay? Because it tells you the time to saturation of these coins. So we know that every week we have 7 coming in and 7 going out. Okay, so next subject, mobility and coin ranking. Less surprising but still highly interesting is the third pattern the scientists disclosed. There's a hard rule how cryptocurrencies keep and change their place in the ranking of cryptocurrencies. So there's a hard rule about the ranking of these cryptocurrencies, right? Turnover of the rank distributions. Average amount of time in weeks, a cryptocurrency. The first rank has been always occupied and continues to be occupied by Bitcoin, while the subsequent 5 ranks have been populated by a maximum of 16 cryptocurrencies. So Bitcoin's always been number 1. The next 5 ranks, only 16 other coins have made it to the top 5 with an average lifetime. So these coins rotate, it's not random, but there are shifts in those top 5 positions every 15 weeks. With these coins, there are shifts that sort of take place at a timing of 15 weeks. These values rapidly change when we consider the next set of ranks from 7 to 12, right? Because we just covered Bitcoin as number 1, and the next 5 were 16. Only 16 currencies have made it to the top, to the next 5. So we've covered the first 6. We're on 7 through 12. 24 cryptocurrencies and an average lifetime of 5 weeks. So if you're trading CoinMarketCap.com and you're trading the 7th rank to the 24th, to the 12th rank, those coins typically are going to be there at that rank for 5 weeks. The coins from rank 2 to rank 6 are going to have a little bit longer fluctuations and movements in the market. But another thing that's important about this is that what that can tell you is that if you're thinking about buying and holding something, most likely you're going to lose money. Again, this is very risky, and the value of your cryptocurrency in your e-wallet, what are the odds that all of a sudden that value just goes away? Again, it's not a currency. It is a shifting, intangible, variable in a very volatile space with many unpredictable variables. So I don't think that buying and holding is going to I don't have an opinion on it. Like, they mentioned the black swans, Ripple and Ethereum. If I was going to invest in any type of coin and hold it, it would be Bitcoin, Ripple, Ethereum, or even Litecoin. And I have my own opinions about Litecoin. I don't know. There's more research to be done on that, but I feel something about Litecoin. And it's not just a feeling. It's something that I personally seen back in 2015. So, I didn't see any of these other coins. I only saw Bitcoin, Litecoin available. All right. So these values rapidly change when we consider the next set of ranks. Okay, we already went over this. At higher ranks, the mobility increases, and cryptocurrencies continuously change positions. So as we drop in rank, it's saying at higher ranks, but as we drop in ranks, okay, 13 and higher, which these are actually the lower ranked coins, there's going to be more movement and constant changing of positions, constant changing of rank. Okay, by itself, it's no surprise that the low capitalized, highly volatile coins do change ranks more often than the larger cryptocurrencies. But again, it's fascinating that this pattern can be clearly represented by mathematics and charts. Evolution theory and cryptocurrency. On to the next subject. Last but not least, the scientists put the dynamics of cryptocurrency markets in the context of evolution theory. This is maybe the most exciting part of the paper. The authors try to explain the market dynamics with the neutral model of evolution. This theory was developed by the Japanese biologists in the 1960s. It assumes that the genetic change, I'm not going to go into all of this, but you can read about it here. And it talks about new individual belongs to a species copied at random from the previous generation. So you think about it, new coins are being built on top of new coins, better coins, and whatnot. So as better comes, as competition steps in, other coins are being eliminated because we're able to see what this blockchain is able to, is capable of, right? So, and it talks about mutation, right? So can this explain the cryptocurrency market? The scientists try and find some surprisingly hard evidence. In our mapping of the ecological models of the cryptocurrency market, each individual corresponds to a certain amount of dollars, while species corresponds to different cryptocurrencies. The copying mechanism accounts for trading, with this representing the probability that a new cryptocurrency is introduced, and we have a new cryptocurrency born with an average. The result is that the scientists are able to use the theory to map three dynamics: the distribution of market shares, the mobility of ranks, and the fall of Bitcoin's market share. Interesting, but no defense against black swans is what this is titled, and we're at the end here. Hopefully I didn't go too long, but it says, for many, these results might be as interesting as they are fascinating. While the mathematical models are surprisingly accurate in describing the market dynamics, they are weakly protected against unpredicted events. Essentially, the black swan of Bitcoin's rapidly sinking market share demonstrates how easily these models and theories shatter when they hit reality. Nevertheless, the authors know about this limitation. And it has a colon here. So the authors basically know that in the immediate and midterm future, legislative, technical, and social advancements will most likely impact the cryptocurrency market seriously. How the self-organized use of cryptocurrencies will deal with this tension is an interesting question to be addressed in future studies. And also, by the way, for those of you that didn't know, because I just learned this myself, the FBI in the United States can, with a warrant, due to well, I won't go into that. But if you have I'm all like whispering over here, but if you have a VPN or a virtual private network or if you use the Tor browser, then in a way you're giving permission to the FBI to remotely hack your system, and there you go. So just keep that in mind if you're thinking about trying to hide your Bitcoins in any kind of way. There's information that, for example, I saw a video on YouTube, and this is exactly what he was talking about and how it can basically be done. And this, so many variables, so many things changing. how much is Bitcoin really worth to you is going to be based off of your perspective of what you think you're going to be able to do with it outside of the obvious, transactions. And you want to be smart. You want to make smart decisions, educated decisions. That's why it's important now more than ever to do your research and just, get on these Bitcoin websites, Bitcoin news websites, bookmark them, and, either subscribe to their newsletters. But you want to be on top of the information. You want to stay updated with how the government is going to impact this space and what's going on with anything related to regulation, as well as to just get an overall picture about your investment portfolio. So thank you for listening. Thank you for taking the time. So thanks a lot, and I'll see you in the next video. Bye for now.